Corporations buying single-family homes has created massive competition for home buyers, and this has helped fuel the home price increases over the last 10 years. Prior to 2010, the single-family home market wasn't very appealing to these large institutional buyers. These institutional buyers are what we know today as iBuyers, and most of them have been funded by Wall Street. These corporate buyers in the past have preferred easy-to-scale multifamily properties like apartment buildings.
That's right, mainly because the economy of scale. And staffing larger apartment complexes with leasing agents and maintenance personnel made more sense than having single-family homes scattered about.
But Melissa, through the years, single-family houses have become more desirable to renters because they want more space, more of a neighborhood feel, and private yards. And this change in housing trends have brought investors to the market. They're getting higher rates of returns, longer tenancy, and quite honestly, resulting in less tenant turnover. And after all, America is becoming more of a renter nation.
According to the census data between 2007 and 2017, the U.S. added less than 1 million households in owner-occupied homes and about 6.5 million in tenant-occupied homes.
I mean, Melissa, that just seems crazy, doesn't it? I mean, home ownership rate bottomed out in 2016 at about 63%. And by the end of 2021, we were right around 65.5%. Now, let's just kind of talk about how Wall Street got involved in buying up these single-family houses in the first place.
Back in 2008, we had what was known as the Great Recession. This was a major housing crash.
Though in many markets, the housing crash started in 2005, 2008 was the year referenced. And by 2010, hundreds of thousands of families were losing their homes as a result of foreclosure.
As housing prices quickly declined, a lot of people chose to not pay their mortgage. The reason being, many of the homes in their neighborhood were selling for $150,000 less than what they owed on their home.
I personally know people that actually did this, Melissa, and I've referenced it before. I actually know somebody that stayed in their house for 10 years without making a mortgage payment.
It's wild.
And as the empty houses started to blight neighborhoods, you would see that, a lot of houses in the neighborhoods were boarded up and they had overgrown lawns, and the federal government was panicked. They thought that this was going to continue to just tumble out of control. And so they came up with this program to save us. And this is where it all began.
In early 2012, the federal administration launched a pilot program that easily allowed investors to purchase foreclosed homes by the hundreds from the government agency Fannie Mae.
And these new corporate owners were required to rent the houses for a period of time before they would be allowed to sell. This idea was to create housing in areas that were heavily affected by foreclosure so that those that lost their homes would have a place to live. And for the Wall Street investors, this worked well.
From 2011 to 2017, some of the world's largest private equity groups, hedge funds, insurance companies, as well as other large investors spent about $36 billion on more than 200,000 homes throughout the U.S.
These large investors argued that they could be way better landlords than the already cash-strapped mom and pops. So I guess ask yourself, who do you think is better for our economy, large corporations or mom and pops? Quite honestly, Wall Street investors had just finally found a way to make money with single-family homes, which up until this time, no one had ever done this large of scale. Corporate America was now in the single-family home rental business big time. Okay, Melissa, let's take a look at this slide that NAR put out based on the analysis by a company called Black Knight. And in this slide, you will see that we did not see double-digit market shares from investors buying residential homes until 2008. So from there, you can see when they put that pilot program in place around 2012, the market share rose to over 15% and pretty much has stayed in the double-digit numbers ever since. It did drop a little bit in 2020. I'm guessing that is right around the time of the pandemic when everything stopped and money for 2 months basically froze in the marketplace because of the pandemic. But now at the end of 2021, that's where we're seeing where that has increased again to 13.2%.
Quite a jump.
So, Melissa, I think it's also important to note that residential real estate acquired by companies or institutions soared to over 90,000 homes purchased in the third quarter alone of 2021. And as both large and small investors accounted for 18% of all single family home sales. That's up around 80% from a year prior, according to the online real estate firm Redfin.
80% is a huge number.
And another interesting point is nearly 3/4 of the homes purchased by investors were single family homes. Now let's take a look at this slide, Melissa, where we can see the states with the highest fraction of purchases by iBuyers. And interestingly enough, this correlates with the double-digit year-over-year price growth that we've seen in the last 2 years. And a lot of the reason why they're buying in these areas, and we'll get to the next slide that will show you, the states with the largest year-over-year increase of iBuyers, is because they were able to get into these areas that the prices were still very affordable and that the return on their investment for rents of these single-family houses made sense. And as you can see here, 28% in Texas alone. I mean, that's way over the 13.1% national average that we just looked at. And then followed by Georgia, Oklahoma, Alabama, and the list goes on. And again, down at the bottom of that, you see 13% on average across the US. And when corporate America started buying houses back in 2012, they wondered how they would actually turn it into profitability. And for some of the reasons that you had mentioned, Melissa, they bought apartment complexes because they could have in-house leasing agents and in-house maintenance people. And it really was the economy of scale. But since then, big tech has made it very easy for these corporate buyers, because it connects them with not only the management companies in these specific areas, but also with very competitive service providers that can make the repairs and the updates that are necessary. And by the way, on these tech platforms, these service providers really compete so that these investors are getting, rock bottom competitive prices.
And let's take a look at this next chart. We can see 84% of the states rose in institutional buyer shares.
Yeah, and this is a year-over-year increase from 2020 to 2021. And you can see where Mississippi had the largest year-over-year increase with 6.5%. And if you're in a state where you said, hey, we haven't really seen a lot of business buyers of single-family houses, and you're in one of the states off to the right, we saw a decline year over year of the businesses buying houses in these states. And Maryland, where we are, is at the top of the list of the largest decline. And a lot of that is attributed to our home prices. So it's very difficult here in Maryland with our high home prices to really be profitable for them to buy and rent these houses. And along the line of what we're talking about here, if you take a look at this chart, this is the county level. This breaks down the counties in the specific states that saw the largest increase in institutional buyers. And at the top of the list is Lincoln, Mississippi. Now, guys, this county witnessed 67% of the home sales were institutional or corporate buyers. So if you were trying as a owner-occupied home buyer to buy a house that you're going to live in, you could see right here what type of competition you were up against. Now, some say that as of 2020, the net operating income margin for these institutional investors of single-family rentals nearly matched that of apartments. And a lot of this has been attributed to the fast rising rents due to wannabe homeowners just simply being knocked out of the market. And in many cases, they're forced to rent from the investors that beat them out. You may say, why in the world would these sellers sell to institutional buyers in the first place? That it just doesn't seem fair. And what you have to realize is these institutional buyers pay cash. So while you have financing contingencies that you need to get approved for, they simply write a check. Next in line to that is they were able to sell as is. So imagine, the house that you live in now, do you know of things that are broken? Well, sellers didn't need to pay for these repairs. And quite honestly, for the last 2 years, they didn't want to, and they didn't. And with these iBuyers, they said, you know what, don't worry about it. We'll take it with its broken items. And another popular reason was that they were able to sell at a specific date and they didn't have to move. A lot of times they were able to stay in, they could rent back. So they were able to capitalize, get their cash at market highs, and stay sometimes as long as they needed to. And then, of course, there are all other kinds of reasons as well, but these are the top.
You know, if you put that all together, Todd, you've got the convenience, the timing, time is on your side, predictability of the actual transaction. You can see why people may choose to go that route.
That's exactly right. And home buyers across America really felt that crunch. You know, now with all this said, Melissa, the housing market across the nation has really cooled off. And this includes iBuyers complaining about the home prices and not being able to make a profit in the rental market based on what they would need to buy the home for right now. And as we know, there are other ways to invest in real estate, and some of these iBuyers bought with the intentions to flip. And as we know, this failed miserably for the company Zillow that entered into the home flipping space and lost millions of dollars for their investors. And also, Home Flipper Open Door is another one, in my opinion, that will bite the dust as their stocks continue to fall. So the real question here, Melissa, is when the investors, the iBuyers got into the market in the first place buying single family homes, was their greed continuing their ownership model, hoping to sell at the top, and that maybe they've missed the mark, or maybe they just plan on keeping them forever. Maybe they're going to have to sell these houses that will see them hit the market because at some point they need to provide a return for their investors if they're going to keep them around at all. And to be quite honest with you, even renters are saying no to their rent prices. But maybe that thought process is wrong. Maybe now, as home prices continue to cool, which they are, they will jump back in and scarf up even more of our available single family homes. After all, according to the World Economic Forum, we should rent everything and be happy, which means renting over the once American dream of home ownership. All right, guys, it's a wrap. Thanks so much for watching this video. And if you like the video, you can hit the thumbs up. It'll let Melissa and I know that you do.
As always, we appreciate your comments and questions. Keep them coming.
And if you want more real estate content, smash that subscribe button. Make sure you hit the alert bell. You'll be notified every time we upload videos just like this.
See you next time.
See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.